Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, August 28th, 2020. And our top stories today, a sea change for the Fed, and this isn't your parents' Dow, and the IPO market ramps up again. Well, joining me now to discuss this and more is Devin Banerjee. He's Senior Financial Services Editor for LinkedIn. Devin, thanks so much for joining us on the program this morning.
Absolutely, Jeff. Always good to be with you.
Yeah, it's always amazing. I know there's so much going on the LinkedIn platform. I know one of the stories you wanted to talk about, though, the Federal Reserve just had a call, and you wanted to kind of dive into it.
Absolutely, Jeff. It was actually a major shift in thinking and policy from the Federal Reserve outlined on Thursday of this week by Chair Jay Powell. So, yes, this was a virtual gathering of their annual Jackson Hole symposium. And as I said, a significant policy shift laid out here. It was approved unanimously by members of the Federal Open Market Committee, or the FOMC. So to take a step back, the Fed has this dual mandate, as you and I have talked about in the past, price stability, which is to say managing inflation, and full employment in the U.S. economy. And what Powell really did on Thursday was signaled a shift in focus to the latter, which is to say reducing unemployment, from a major focus of actually the past 4 decades really by the Fed on the former, which is to say that focus on fighting inflation. And as I said, the former, the focus on inflation, the almost obsession with tamping down inflation has really been core to the Fed for the past 40 years. If you remember the tenure of Chair Paul Volcker in the late 70s and throughout the 80s, Volcker really ushered in that controversial series of rate hikes that really sought to fight inflation, tamp down inflation. That actually, during the 80s, was a major driver of the recession in the United States. And, since then, the Fed has remained quite highly focused. And as I said, some people think obsessed on running inflation low. So what Powell said on Thursday is, let me just look at he had some really interesting quotes here. He said, running inflation low can lead to an unwelcome fall in those long-term inflation expectations, which can actually produce reality. It can pull actual inflation even lower, and it results in this adverse cycle, as he calls it, of ever lower inflation and inflation expectations. And really, this is the crux of it, because lower inflation, and persistently low inflation is accompanied by lower interest rates. And the point that Powell is making here is that these low rates, which we're at right now, as you and I have talked about, we're at that lower bound. Benchmark rate is at that 0 to 0.25% range. That leaves policymakers with little to no room to bring those rates lower, in the case of an economic crisis. So this is really an explicit recognition that too low inflation is a major problem rather than too high inflation, which, as I said, has really been, the thinking of the Fed for the past few decades. So it's a shift in thinking. And the shift in policy is that, the Fed is going to take this average inflation targeting approach. So it has this 2% goal, 2% objective, typically for the inflation rate. Powell is saying the Fed is going to allow inflation to run above its 2% goal following periods when it has run below 2%. So they're going to average out to 2%, but they're going to let it run a little hot. And what that means, Jeff, the big takeaway for us, everyday people, the viewers of this, is lower for longer, lower rates for longer to allow inflation to run up. And that translates, to this, we talk about these generational lows in mortgage rates, in business loans, et cetera. The takeaway is those are just going to continue.
And Devin, I have to imagine that this probably met with some mixed feelings. You and I are speaking on I was going to say Sunday morning. We're speaking on Thursday morning your time, and about 3 hours after the comments. Yeah. But what has been the reaction from people on the platform?
Just a fascinating range of reactions, Jeff, and a really passionate response. I'm seeing a lot of people pointing back and hearkening back to the 80s. And, these are people who are around, who are in business in the 80s and remember those interest rates that had run up so high under Volcker, and just the anxiety that had produced and the recession of that time. So a lot of people are saying this is a long time in the making, that they have wanted the Fed to shift its thinking like this for a long time, to reduce its obsession with tamping down inflation, and letting interest rates remain a bit low for now to allow inflation to run up. So I've seen a lot of reaction about that. We're also seeing a lot of praise for the Fed's kind of shifting in its focus to the unemployment situation right now. And actually, you and I have spoken about this, Powell in particular, and I think there are going to be several books written about this tenure of Chair Jay Powell. He's really talking about making this recovery and this path of bringing down unemployment, making it more inclusive, making it more broad-based. This is kind of the first time in the history of the Fed that we're hearing those kinds of words and that kind of talk from the chair. So Powell on Thursday said, our revised statement emphasizes that maximum employment is broad-based and inclusive of a goal. He says this change reflects our appreciation for the benefits of a strong labor market, particularly for many in low and moderate income communities. So this is really top of mind for him, this focus on reducing the unemployment situation right now and making it broad-based and inclusive, as I said, is quite rare. And it's clearly, in these statements written down from him, it's clearly a huge focus for him and the Fed.
Devin, you covered the asset management industry for a long time. Would you expect managers, how do they kind of read the tea leaves here? Because a lot of their assumptions and how they plot things out can depend, that doesn't always just depend, but can depend on what the Federal Reserve is doing, what the economy is doing. Would you think that there would be any type of sector rotation, reallocation? And I'm talking in general. We're not giving investment advice or guidance here. We're just theorizing here. Any thoughts about that?
Well, I would just say at a high level, Jeff, you're seeing the market respond and react almost every time Chair Powell has spoken in recent months. You're seeing the public markets react very positively to this. Low rates, encourage credit creation. One person's borrowing and spending is another person's income, and it really just powers the economy that way. So we're seeing the public markets react very positively. And then, my conversations with people in the private markets, which I've covered for a long time, private markets that rely on leverage, for example, the leverage buyout market in the private equity world, they are just, credit is so readily available and so cheap. For them to make acquisitions is just going to become easier and easier. Obviously, the multiples at which they're acquiring these companies are being bid up quite high, and in some cases at scary levels for them. So deal activity has not been so robust. But certainly it's going to allow the private markets to continue in their deal-making spree that we've seen over the past decade.
Yeah, well, certainly, look, things seem to be changing day to day when it comes to this healthcare pandemic and the issues that we're dealing with regarding that. And so I guess, Devin, it only makes sense that there would be changes at the Fed and economically as well. Well, Devin, I want to go to a quick break, but when we come back, we're going to talk to Devin about the Dow and how this isn't your parents' Dow, and also IPOs are ramping up again. So the season is back. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you were like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Devin Banerjee of LinkedIn. Devin, thanks so much for staying with us this morning.
Absolutely, Jeff.
Well, so it sounds like a slow news day. Nothing much to talk about. But I know one of the things you wanted to dive into is the Dow has been reconstructed or changed for the first time in a magnanimous way in the last 7 years. And this isn't my parents' Dow, your parents' Dow, our parents' Dow.
Yeah, absolutely, Jeff. The largest shakeup to the Dow Jones Industrial Average that we've seen this past decade. So stepping back, the Dow is this 30-company index. It's price-weighted, which is important. I'll get into that in a minute. But a rotation here being announced early this week from the committee that manages this index and this average. So entering the Dow is, software maker Salesforce, biotech giant Amgen, and the big industrial conglomerate Honeywell. These three are replacing ExxonMobil, which I'll touch on in a minute, Pfizer, and Raytheon Technologies. So a lot of people are pointing to the driver of this being Apple, another member of the Dow, and its decision to undergo a 4-for-1 stock split. What that will effectively do is reduce the price of Apple shares by about a fourth. And because the Dow is a price-weighted index, the literal price of shares of different companies determine its weighting in the index. So by undergoing this stock split, Apple is effectively going to reduce the exposure to the technology sector across the Dow, and that's really driving the entrance of Salesforce, as I mentioned, one of the three entering the index. So really interesting shakeup. A lot of people are pointing to what's happening to ExxonMobil, which has in the past been one of the largest companies in the world. It's been a component of the Dow for almost 100 years. So kind of the larger arc, the larger story is this decline, if you will, of the oil giants and of the energy sector. As I said, very busy week in the public markets. In addition to that news early in the week, we've seen just a flurry of IPO and IPO-related filings this week. It's clear that the IPO season is back. The IPO window is wide open. So some of the filings we've seen: data storage provider Snowflake, data analytics, that data mining company, sometimes controversial Palantir, software management company JFrog, project management software provider, Asana, Unity Software, Sumo Logic, and actually several more. But as you can see, very software heavy. And actually, this trend has been global this past week. In Asia, we've seen Ant Group, formerly known as Ant Financial, that's the fintech arm of Alibaba, filed for a listing in Hong Kong and Shanghai, which could really be the largest IPO of all time, Jeff, if it eclipses the about $29.4 billion that Saudi Aramco raised at the end of last year. So look, the big takeaway, this is global. The appetite for new issues, the appetite for these deals is extremely high. Even money-losing businesses, which is not uncommon as companies are approaching IPO, but even many of these software businesses I've mentioned are still losing money, but are seeing revenue growth during this time of global virtual work, global work from home. So there's a lot of appetite for new companies in the public market. And this is not unrelated to our first segment, Jeff. You know, as we were talking about lower rates for longer, it's pushing investors out the risk curve, out the risk spectrum. They need to put money to work. They're looking for yield, for capital appreciation. They're not really getting that in the fixed income world driven by interest rates. And so, as I said, the public markets have reacted quite positively so far to what the Fed is doing, and the demand for new companies to enter the public market is just growing.
Yeah, that was going to be my question to you, Devin, is and you already answered it, but I'll just restate it.
Yeah.
I mean, I think that what you described in the FOMC, the sea change there, and I'm wondering, you know, that's a sign of policy change? And now you have these IPOs, and as you stated, we could have one of the biggest or the biggest IPO of all time. Is the economy kind of picking back up? Because, you know, we've got this unemployment number here in the US. I think it's worse in some other parts of the world. But is this going to be the engine that drives America and also drives the world economy in the next decade plus?
Yeah, it's certainly interesting to see what kinds of companies are coming to market. As I mentioned, a lot of software makers, a lot of technology companies. And so, you know, what's happening during this period is that bifurcation and that divergence that we've talked about. While, you know, technology and software has become so popular and the revenue growth is steepening, you know, we're seeing energy, like as I mentioned, really struggle, you know, travel, leisure, hospitality, retail, all of that. So there are these two worlds, and the public market, of course, is not uniform at all. I mean, even if you look at the other index, the S&P 500 and the weightings, which is a market cap weighted index, and you look at those FANG stocks that really comprise almost half the index at this point by market cap. And so we're seeing a lot of behavioral shifts in that regard. In addition to the kinds of companies coming to the market, we're seeing many different avenues or paths to the public market being created. And so, you know, direct listings have become quite popular in recent years from the likes of Spotify and Slack. The New York Stock Exchange on Wednesday this week said it's received SEC approval to change its rules around direct listings and allow companies to pursue direct listings while also raising some new money at the same time, which traditionally was not the way to do a direct listing. That was a traditional IPO. So the NYSE now will change its rules to allow that path. Reuters reported as well that NASDAQ, the other major exchange, is applying to change its rules as well. And we're seeing the SPAC craze, which you and I talked about, I think about a month or maybe 6 weeks ago. Yep. These blank check companies that IPO and raise money from investors and then go and pursue an acquisition with that money. We're just seeing that continue in a frenzy. About 80 SPACs have raised $31 billion combined on U.S. exchanges this year. That tops every single previous year, and there's still 4 months left in 2020. So this week we've seen new filings from the likes of Gary Cohn, the former Trump advisor, and the former Goldman Sachs president. He's teaming up with Cliff Robbins for a $600 million SPAC. Private equity giant TPG is looking to raise about $700 million across 2 SPACs, one focused on a tech acquisition, one focused on an ESG acquisition. So these are just adding to those roughly 80 SPACs this year that have raised about $31 billion already.
Well, I think, Devin, this show and this reporting just adds to the craziness that is 2020. You think about where we've been, think about where we are today, and where we could go by the end of the year. It makes 2020 pretty unique in the history of, I guess, our country and the world. Devin, always a pleasure chatting with you. Thanks so much for excellent information, and we look forward to having you back on the program again very soon.
Sounds good, Jeff. Take care.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, tech, personal finance, and more, check out today's edition of the Morning Pulse. Don't forget, we're back again tomorrow with our retrospective weekly show, BRN Weekly. We'll take a look at some of our best segments of the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.